Hey, good morning, folks. Hope everyone's doing all right. Happy hump day. Before I get started, as usual, you hit that subscribe button, hit that bell icon so you get notified on future videos. So, with that dawdling around here, let's just get down to business. First things first, API release overnight. For the crude traders, let's go straight to the point. Crude, we're holding around that 120 handle near those highs. Um, and this despite API numbers coming out on the complete opposite of expected figures, expecting a draw of 1.8 million. Instead, we had a build of 1.8 million-ish, 845 million. So this goes to show there's just bigger forces at play. Driving season in the US, supply tightness in general, the war in Ukraine, and refinery utilization, like what have you, like all these things we've been talking about for so long, it's really showing here, and potentially demand coming back of China as they pretty much start lifting lockdowns, and which goes to show like tomorrow early doors we'll be getting the Chinese trade data. Be really, really interesting. I mean, it's always been an important data point in terms of, the global demand in the larger macro picture. But the thing is, due to the lockdowns that have been happening due to COVID zero policy, it'll be interesting to see how a number comes out. We have seen a much softer shrinking of PMIs, so we could be getting positive vibes out of Chinese trade data tomorrow. Uh, that's number one. Number two on the docket, we have this guy here, the euro. We're holding above this support level I've been talking about for way too much now, and uh, if we do get there, to be honest with you, that's a really decent long. But if you were to trade in this market today, bear in mind that we have ECB rate decision tomorrow. So that will be a biggie. Why aren't we trading much or buying into this market right now, even though we're expecting, basically the rate hike to continue because Lagarde has already cemented the fact that, Eurozone's coming out of negative rate era this year, if I'm not mistaken, come September. So this is just, we've already traded it, right? This has already happened. So we're just seeing some consolidation going around here, creating this nice, really clear support level over here on the 06600s. So that would be a nice, if you were a swing trader, really nice place to get long over there. But intraday wise, you might want to, I wouldn't think that we would, in terms of risk, it might be a slower trade than usual, but still a really great place to buy because we've seen how buyers have been buying this. Create the access over there, and then that huge green candle just buying into it again, getting capped around 1.07500s. So that's the euro. Next on the docket, obviously, because we've seen the dollar just holding above that 102 handle, really strong stuff out of the dollar. When I say strong, this is historically, right? It's not, just because you don't see something go like this, it's not strong. No, this is strong. The fact that it's not selling off means we are still pricing in, because it's not going to be like a straight line, because there's other factors at play, like the euro, for instance, because the euro also, you know rate differentials. And speaking of rate differentials, that's exactly why this is happening to the Japanese yen, which is giving a lot of fuel to the fire for this Nikkei to do this, is continuing its bid over here, right? So I suspect we'll be seeing a bit of consolidation going around before this goes one way or another, or a pullback could also be in the cards. So similar on what do you call this, on the euro, this we're seeing this support level being created here, a bit of consolidation going around as well. So within the last 3 days, we've pretty much, created a nice little resistance trend line that could potentially propel prices forward before we get another test at the 4200 handle. So And this just lines up nicely with that 4100. But I wouldn't think too much about the handles right now because we've seen the buying coming in from here. So if we do get there, if we do break further down and the dollar, continues above this, what do you call this, 19th of May low over there, which where we've seen a lot of profit taking going around, we might see the dollar continue because you never know when buyers are actually going to like step on the gas, right? Given the fact that we are getting the inflation print on Friday. So any trades you get into could move really quickly or just really slowly. So my advice is to just keep things really technical until, next week, potentially. I hope this was useful. Have a great day ahead. Any questions at all, just hit the comments, hit us in the Don't Capital Discord room. This is Reed bringing you the daily briefing. Cheers.